new panel is going to be about blockchain that turns an industry practice. So I'd like to invite the speakers. Ms. Pınar Emirda, please can we have you on the stage once again, CEO of Complimatic and co-founder of Fintech Park. You're welcome again. Good to see you. Also, we would like to have Mike Greenacre, CEO of Otilla. His full international career has been spent in commodities, exploration, trading, broking, and fintech applications. Also, Adi Benari, please can we have you on the stage as well. He is the CEO of Telestics. Please, he's the co-founder at Telestics and Applied Blockchain. He has over 20 years experience developing, designing, delivering, and integrating enterprise software solutions. The stage is yours. We would like to hear you about, pardon me.
We would like to invite actually Peter Randall as
Okay,
well.
sure, that was a pleasure.
Because I think he's our guest panelist.
Okay, so he's the last seat. Okay, thank you.
We figured we should have the more the merrier. Thank you. So, brilliant, all right. Okay, so this is going to be interesting. We have been talking about blockchain for a while. We heard about it today already a few times. And I do hope that this panel will put things in perspective a bit, because I believe it's very, very important to really understand what we are talking about and what is the use and what are the real business applications, because if you think about it, you know, we're actually talking about technology here mostly. So, I mean, it looks like we are talking about technology here mostly, but we should really understand what it is good for. And this panel actually especially is really put together because everybody here are practitioners looking at this, this technology from the perspective of enabling businesses on by using this piece of technology or this piece of paradigm. So that's the idea. And before we get there, and so I'm quite excited about this. Before we get there, I think it's very important that we clarify something, because I think the terminology is very important. The definitions are important, and we need to understand what blockchain actually is. What we've heard, for example, today, Pamir saying that he actually supports one type of blockchain but not other one. So mentioned that there is permissioned blockchain versus non-permissioned blockchain and things like that. So I'd like to kind of set the ground around that. And I'm not quite sure. Perhaps let me actually start with that, and then I will, maybe the panelists will help me correct what we are talking about. Just only to, like, I will just talk about this here. So, you know, there is this concept of Bitcoin, and there is the underlying technology of Bitcoin, which is what's called the original blockchain. So what it is that one can actually send a value, Bitcoin in this case, from one point to another, like from London to Turkey, someone, without any intermediary in between. So there's a technology, piece of technology that enables that. It's powered by cryptography, by essentially mathematics and technology, and there needs to be no bank in between, in theory. So that's actually, it's not in theory, it actually is what the underlying technology is like. But most of the times, and in this panel as well, I want to really clarify that, we are talking about the context of financial services as we know it, where we actually need to know who is on that system. So in this original system that I am talking about, actually it's an open system. Everybody can be part of the system, and it is called it's an open system. It's permissionless for that reason. And so there is this concept of other blockchains. Sometimes people call them distributed ledger technologies, distributed automation technologies. I heard many names, and there is no consensus around this, I suppose. But in financial services, we do need to know who we are dealing with. So this context here, everyone here actually is working on businesses which are going to serve financial services clients, at least at the beginning. So the systems that we are talking about is actually the technologies basically which are databases, which are replicated, which secures transactions cryptographically, and I'm really simplifying this, with some consensus algorithm, which are controlled by a group or groups of people who we know who the identities are of the participants are in that system, which is just like our financial services. So before I move forward and start asking you questions as the moderator role, is that all right? Do you want to add anything or correct me about anything? Because you're also the experts. Adi, maybe you are the technologist in this crowd?
No, but I mean, I would add, there's something I'd add. It's a bit related to the company, but a company called Tallysticks. And does anyone know what a tally stick is? So 1,000 years ago, it was Europe's banking system. So basically, two parties come together and they want to record a debt. So they take a stick, a piece of wood, and they etch markings into the stick to represent the terms of the debt. And then they split it in two, and each party gets their copy. And we like to think of that as the first distributed ledger. It was immutable because you couldn't change it. If you changed it, you came back together, the pieces wouldn't match. And these are the properties of the blockchain technology, as we
Perfect. And in addition to that, we had a historical perspective already this morning, so I think we covered everything. All right, so I think the really most important thing is, could you please tell me, maybe I start with you, Mike, like what you are working on, and because that's, I mean, I guess that's a very good start, and we go from that.
Yeah, sure. Good afternoon, everybody. I run a company called Ortilla. We made up of, I've been in the gold bullion business, precious metals business for 20 years. And something Alistair touched on earlier in his perfect storm story, part of his presentation, is what a lot of our clients are facing now. Our clients are all banks. We only deal at the kind of very central part of the bullion market. And they have issues around compliance, regulation, who's dealing with who, how they're transacting with each other. Bullion is an unregulated business, but and there's several, come from a commodities background. Most commodities businesses are unregulated, but how the banks are transacting and how they're going to be viewed on a trade they do today in 3 to 5 years' time. We've seen all the things with LIBOR crisis and things that are happening, or LIBOR issues that are going on there. We got involved in looking at blockchain 18 months ago. We were aware of what was going on. I was never a big fan of Bitcoin, not because, just because my personal view was that it couldn't really do anything for the environment I was working in. Then we met some other blockchain tech guys, and they introduced us to a private permission blockchain that Pinar touched on. And we kind of looked at that as a way of solving issues for settlements within the banking sector. What it also does is it brings through another issue that people have is the cost of transacting. So gold since 2008 has been a very expensive business to transact. Takes a lot of finance to get involved in it, and if you can reduce the settlement times and settlement processes, then that's a massive advantage. At the moment, if I was Barclays Bank and Pinar was HSBC and we transacted gold, we'd agree a price today, but that transaction wouldn't be settled until 2 days from now. So on Thursday afternoon, I'd receive dollars and then Pinar would get her gold. So there's a lot of benefits that come from blockchain. That's why we're looking at it, and that gives a little of our background.
So could I continue with you, Adi?
Sure. So first of all, my background is technical. So I'm sort of a hands-on techie, and I've looked at blockchain from a technical perspective. So what is actually here in the technology? What does it give us that we can't do with any other technology that we have today? Or what does it actually make simpler than is possible to do today with other systems? So it's really coming at it from that perspective, seeing if there's any special properties there, and then seeing where they can give us an advantage or some efficiencies. The businesses that I've been involved in, there's two. Well, I've co-founded Applied Blockchain and Tallysticks. They're two companies that are part of Innovate Finance that Alistair described. And we've also put Tallysticks in front of the FCA. So it's part of that regulatory cooperation that Alistair was describing. The properties that we've looked at in the projects I've been involved in, including Tallysticks, is really using the blockchain as a type of shared database. Now, shared database sounds like a simple thing. You think databases have been around for years, but actually, for two companies that don't trust each other, to share data without having somebody in the middle hold that data for them is a very, very complex thing to do. And it's actually not really been achieved in any meaningful way up to now. And that's the starting point. That's the first place where we're using this technology. And in Tallysticks, we're using it to record invoices. Invoices are the most basic way in which any two companies interact. Right? They send an invoice and then there's a payment made on the invoice. It's the core of our trading world, but it's the most basic in terms of IT. So most of it is paper-based or PDF-based. Each company has their own system and they don't talk to each other. They have their siloed accounting and ERP systems. And so we've taken this as a first place where we think there should be a shared database. So we put the invoices onto a blockchain, so it's basically a shared record. We get the buyer and the supplier both to digitally sign that record. And then on top of that, we can overlay lending. So we can present that to the bank, and where the banks today might lend, they do invoice financing, what is called factoring, on paper invoices or PDFs or CSV files, for which could be fraudulent and they have no provenance of. Here they have a digital record which is signed by all the parties and which is shared by the parties. So it's a less risky basis for lending. And then on top of that, it's a digital basis on which the bank or the lender can turn around and sell that invoice in the secondary market. So to turn an invoice around in 30 days is very challenging. But here's an infrastructure that allows you to do that. So that's the solution we're looking at.
Sure. Peter, what are you up to?
Well, thanks, Pinar. Well, just building a little bit on what Mike and Ari have very thoughtfully laid out. Technology is great. It's fantastic. Yeah, I'm prepared to buy that. What I'm really interested, though, is in how you're going to make money out of this. And the opportunity to make money out of it, I think, is reasonably clear, reasonably open. It's not something that I'm going to keep a secret. I'll share it with you. I think that's important. Before I do, let me just ask a couple of questions. There will be some people in this room, not very many now, I'm one of them, but there will be a few others, that can remember when there used to be things called telephone operators. If you wanted to make a telephone call, you had to phone up somebody and ask to be connected to another party. There are people that can remember that, right? A few. There's probably only a very few number of people in this room can remember things called dockers. Do you remember what a docker was? What a docker does? What a docker is? Docker is somebody that unloads a ship. All right, so a docker comes along and he's very strong and he's got a donkey and he puts things from the ship on the back of the donkey and then walks to the warehouse or the go down or wherever. Stuff gets stored and all the rest of it. It used to take a very long time to unload a ship. Stuff used to get lost, it used to go over the side, it used to get stolen, it would rain, it would be a nightmare. You're never sure how long it was going to take, you're never sure how much it was going to cost. It was a nightmare. World trade was like this. It was big, but it was like this. Was that the CIA? Or? And then along came containerization. Today, the crane on the dockside in Hong Kong that loads the box onto the boat doesn't care what's in the box. It could be soft toys, it could be food, it could be car parts. It gets to the other end, the crane takes it off and puts it on the truck or puts it on the train. It's become standardized. The same opportunity now exists in financial services to do, and I would say very clearly, that blockchain promises to do for payments and finance what the shipping container did for world trade. And that's the opportunity for all of us to make more money than you can shake many sticks at.
So that's quite interesting. So just I'm wondering practically where we are and how things are going. I mean, perhaps I actually ask Adi, what are you like exactly working on? Who, like clients, who are, like not necessarily who exactly, but like how is it going actually in terms of people adapting what you are bringing to the market?
Okay, so with Tallysticks we were selected for the Barclays Techstars program in London this year. from 700 companies, and we've been through that. So that's taken 3 months. We're now working on a pilot with Barclays on a real customer. So they're going to be lending side by side using their existing processes and using our system. And we're going to measure and compare the processes.
So that is a real project.
That's a real project. So we built the system. We've built the blockchain logic. We built an application on top of it. And just a point that we discussed earlier is that in a lot of these solutions, the blockchain is a piece of technology that sits underneath that allows you to do certain things more efficiently or in a certain way. But all of these solutions have a mountain of work on top of that. So the blockchain starts off being something that enables it, but then there's the application on top of it is just disproportionately huge, and that's where all the effort is.
I think that's a brilliant point. I think it's a common point for most of the fintech companies as well, because what I observe is that we're talking about fintech, and usually, very brilliant people, very good ideas, very incredible technologies. But then, in order to bring it to life, you need to do so many things, and which is about regulation to understanding operations and integrations and interfaces and all that, and I think it's quite challenging.
The other thing, if I'm honest, is that the technology is not mature.
Yeah.
Right? It's a new technology. We're certainly not using it in the way it was designed. So we're using the Ethereum platform as a shared database. That's not actually what it was built for. And so we're finding technical challenges there, and we're looking at lots of other platforms, and it's quite a close, we know a lot of the other people working on similar platforms, and so there's a lot of collaboration technically to solve a lot of the challenges that we're facing. Some of them include privacy. They include how to, in our case, it's bring on companies, KYC them, make them blockchain participants without actually realizing that they're using the blockchain, but securing things in that way. So there's lots of technical challenges there that we're working on behind the scenes, as well as all the business development and all that application that sits on top.
I'm curious about a few more things, but before I go, maybe I should ask Mike about what's your vision for what you are working on? What could be the future in the gold market or any other connections cross-border? I mean, what do you expect?
In my experience, we deal with an international group of banks, Australian, Asian, European and American. And the banks kind of have a two-step approach, and I think when you see some of the things in the press, the banks almost need to tick a corporate box somewhere that says they're involved in blockchain somewhere. When it comes actually to spoon-feeding it to them or getting it into their psyche, I think they're a long way removed from that. They're still living the nightmares of 2008, 2009, and now the regulators are jumping all over them. They're being fined. The fines, as Peter laid out this morning, were kind of quite excessive. There's still some skeletons in the closet, I'm sure. I think that it's going to come up sneakily on us, and I think there's going to be there's some people talk about providing all-encompassing solutions, but I think some of the people we've met, they're producing just something that's very simple, just look at one specific thing and get that in the door and over the threshold with someone. From our point of view, I don't see banks adopting any kind of settlement process using blockchain in our markets in commodities. I think it will come firstly through something like foreign exchange or bond markets, where you can have smart contracts which are simple to deploy. I think, though, in the future for blockchain, I think, I always get asked, and my wife came on this trip with me, and we got asked at dinner parties, what is blockchain? And I think it's when you talk about trust, and I think, to put it simply, how I do it, and I'm not a blockchain technologist, we're just looking to use it in our daily work, is that if you're married, you have a relationship, and that trust is understood between you. If you have a relationship with the partner, with the business partner or whatever, when it comes down to dealing with a bank and countries, those are implied trust, which is kind of instilled from somebody's status. I think what blockchain does is it mathematically proves that it either is or it isn't, and it gives you a binary answer to a question that sometimes goes into grey areas.
Actually, there is a jargon alert there because I'm actually quite interested in. There is a lot of jargon in this market, and you mentioned smart contracts, and so I feel like I should explain what people may mean by smart contracts, even though it's very ambiguous itself, and everybody has a different definition. So there is this whole argument. This is a little education of smart contracts, which came to this market with this blockchain discussion. So what it could mean is that there is a possibility that a piece of code is actually embedded in this database, and it actually automatically executes in this whole network and the database structure, the whole blockchain, let's say. And so it's not, I mean, it's very complicated. Many people actually have different type of definitions around it. But so it's a self-executing code which is triggered by certain events, and it's basically what smart contracts are. And so with that, also you mentioned something else, and I think I'm gonna take it to Peter though. You mentioned regulation and regulators, and is there anything that we need to think about what's going to happen with the regulator and regulation in the future about in this context, and any impact on them or by them?
Yeah, I think there will be, Pinar. I mean, I think the analogy is effectively air traffic control. Air traffic control doesn't go home after the last flight has landed or the first flight has taken off. They need to be there to monitor the flights that are across the Atlantic or flying over from Asia or wherever they're going to. There need to be somebody there monitoring it. Now, doesn't necessarily mean they have to do anything at that moment, but there has to be somebody there just in case, etc., etc. So what that really implies is that if we can possibly have 24-hour trading and 24-hour settlement, then it seems to me to be wholly practical and, in fact, desirable that we would also have 24-hour regulation. So regulators that previously sort of worked from 10 o'clock till 3 o'clock with 3 hours off for lunch, probably now going to have to work from 3 o'clock till 10 o'clock with no time off for lunch, i.e. that the public good of making sure that markets are safe and fair and that they're properly administered is something that's going to have to move, if you will, from the possibly described as the 19th century into the 21st century.
So does it mean that our taxes will need to go up?
Well, I would have thought, all other things being equal, the taxes could go down because effectively, instead of monitoring lots and lots and lots of different ledgers in lots and lots of different formats in lots and lots of different financial institutions, the only thing they're going to have to be checking is effectively the blockchain to make sure that when parties get into trouble and defaults start occurring, that there's somebody there that can take action. And it's really important to recognise that it's got to be as much a part of the future as it has been of the past that defaults happen. Default is a really important part of financial services. Default is risk. Risk is directly analogous to return. If you try and build a system that has no possibility of default, it has no possibility of return. By and large, you have got to have a system that is able to mirror the real world. And the real world uses default. So let's just play with that idea for one moment. At the moment, if a bank fails to make a payment at the cut-off time for some system reason or some fact that the person responsible for it has gone to the bathroom, that's not recorded. Nobody ever writes that down. Nobody even remembers. They just phone them up and say, hey, you've not made the payment. Oh, I'm sorry, I'll do it now. That's all that happens. Of course, in the blockchain, it's perfectly possible to record that failure to make the payment at the time you said you were going to make it, in the funds you said you were going to make it in. That would then become part of the immutable record. Now imagine trying to do counterparty risk on a bank who you've asked to see their immutable record of fails. And you look at one bank and they've got 100,000 fails in the last month. And you look at another bank, they've got 10,000 fails in the last month. Which bank do you think is more likely to do more business? Of course, the one with the fewer fails. In the past, there was no way of recording it. In the future, there will be. That's a really important point.
Actually, I think you both want to add something.
Just one thing on that is that we're taking the same model to companies.
Yeah.
So we're basically, with the invoice and invoice payment, we're then saying the same thing. You can now decide the risk of lending to a company based on that immutable record of their payment history. Do the customers pay their suppliers on time?
Yeah.
So just
I think it's the key role of having a regulator that's kind of on the ball, and I think you could use the analogy of saying that it's like you have a straight piece of road and you have a speed camera every 50 meters. You can't stop somebody speeding down that road, but you know that you're going to get a letter in the post and you're going to get a fine if you do speed. And I think it's how the regulators react and what they do to allow markets to flourish and allow people to carry on doing business. And has, the questions we get are, has regulation gone too far or not far enough? And regulation's now become a political issue rather than an issue that is actually solving anything, it seems to be.
So it's interesting. So we are really not also talking about future of regulation and data analytics and all that here as well, right?
Yeah.
So interesting. So if you think about it, so the whole idea is that there could be a possibility for dynamic regulation, I suppose, and more access to data. And I think in the UK, FCA regulates about 60,000 institutions, and I remember a number like that. And it's quite hard to regulate that many institutions really properly, if you think about them. They have a way of doing that. But so so we are talking about more bringing the regulators and the financial system together. Does that also mean that we are bringing the financial system and the consumers closer to the financial system as well through potentially, your digital, like the gold project and access to gold and digital assets?
I think there was some really interesting comments about something I'd not heard about today about insurance, and that there's, in the car insurance market, there's 8 manufacturers, 8 core insurers, reinsurers, and 1,000 people doing business that maybe should or shouldn't be there. And I think, if you take those out, what are those steps where you can bring people closer to their core markets? And you look at flat organisations, flat organisations. Maybe you could flatten markets out and take out people who shouldn't be there. It's kind of that, what happens to those people kind of thing. Is it better to keep them there or not? It's like keeping a steel mill that's only just viable in business or not. Do you or don't you? And I think, name of efficiency and open markets, you have to let things run their course. But I'm all for getting people closer to the core of things. But I think we also have to, blockchain will bring efficiencies. It will bring efficiency in tax collecting. I believe we'll be voting in it soon. I think it gets us all there.
Interesting. So Peter, you seem to have a view.
Yeah, I do. I think it's very important to be nuanced about how far down the system you actually go. So let's just pose a bit of a question to the audience. I'm going to give you a choice now between having central bank money in your bank account or having money from your commercial bank provider. What would you prefer? Would you prefer to have money in your private bank provider, or would you prefer to have central bank money? I know the answer to the question. There's nobody in the room, well, there's probably one, but there's always one. There's nobody in the room that would prefer to have commercial bank money. Everybody wants to have central bank money, right? Why? Because there's no risk attached to it. Central banks, by definition, cannot go bust. Commercial banks, however big, there is still that tiny scintilla of possibility that a bank could go bust. Now, you want to be very, very careful, however, therefore, how far down you let central bank money flow. Because if we all wanted central bank money, what would happen to the central bank balance sheet? Bang! It would explode. And what would happen to every commercial bank in the country? It would collapse. So if we want the system to control every single piece of our daily activity, then you've got to be very, very careful where you draw the line. So there's a very strong political argument that says, well, yeah, it's okay for big banks, it's okay for big insurance companies, it's okay for big people to move stuff, but when it starts to get down to individual consumers, there's some very real, bigger, broader political issues. Because remember, that system was tried. It was called the Soviet Union, and they had to stop it because it didn't work, i.e. the central bank would make every decision about every single activity. So be very careful what you wish for.
So it sounds like we are talking about the one important point here, which is about the interconnectedness of all the markets and different type of businesses. And of course, inevitably there will be all like new opportunities, new marketplaces, changing business models as we go. So I think we have almost no time left, and I'd like to close the panel saying that hopefully we could talk about the topic without really talking about technology, but more about what it enables. And I hope that we leave you with that thought. Thank you.